Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily SPY report for Wednesday, February 16th, 2022. Before we jump into the charts, as usual, I just want to encourage you to please click like each and every time you watch the Daily SPY report. It does help us out a great deal in being found on YouTube when others search for SPY analysis, S&P 500, so forth and so on. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. And being notified early is to your advantage when the material is relevant and ready to use for your trading and analysis. Let's take a look at the charts. I'll start with the big picture as usual. You have that long-term channel bottom. We closed below several weeks ago, back above a week later, back below. It is kind of a chop, both sides. You know, at some point it gets to the point where you just really you don't trust it anymore. You have trust issues with line studies. Anyway, I'm lightening up significantly on 447.03. I'm going to call it an intraday resistance level. Give this market room to breathe to the upside, perhaps, and the intraday support is the 443.45. I'll show you the support and resistance here in a minute, but these are the intraday containment levels, also the intraday pivot points. If we push above 447.03, we could push into the 452 handle today. I'll show that in a moment. And if we break 443.45, we could fall into the 435 handle intraday, and I'll show that in a moment as well. I want to talk briefly. I've been showing crude oil charts, and so I might as well continue, with the Russians, moving some troops away from the border. It just feels like gamesmanship really right now. And the chances, obviously, of the Russians invading Ukraine appear to be less, and this caused a $3.50 a barrel sell-off in Tuesday's West Texas Intermediate. We are back into this zone of support. This is one of the reasons why I like to wait for weekly settlements. I had mentioned how the settlement on Monday, clearly above this 92.98 area by a 1% margin, was considered tentative, but there has been no follow-through, obviously, and we're right back into that zone. So there is no clear buy signal, no impending buy signal. We could just as easily continue south later in the week, and certainly if we close below 92.17 or fail to close above 92.98 at all on Friday, this market, the broader crude oil market, remains subject to a bearish rotation as we continue into spring-summer trade. So there's that. And, there's several days left in the week. There's a lot of room, a lot of time left for the SPY to continue to recover. It's still in a sell pullbacks mode. Let's take a look at the support and resistance. I showed you how 447.03 above is that long-term channel bottom. I've reduced it dramatically to just an intraday containment level. And 443.45 is that former short-term channel bottom. We gapped above that on Tuesday, we almost reached that 446 and change long-term channel bottom that is now at 447.03 today. So we could trade inside this zone for a good part of the day, but if we push or open today above 447.03, I do think we're likely to reach that 452.05. It's a near-term descending channel top at 452.05. It can contain daily buying pressures, possibly through the balance of the week. If we gap above 447.03 today, that would be the second gap up day in a row. We could quite easily reach 452.05 on an intraday basis, where we can place a daily high, and we could actually top out there through the rest of the week and fall off from there into next week. That is a possibility, but I'm reluctant to call that kind of a 2 or 3 star level. I just want to keep it simple here. This is a good spot for day traders, and perhaps through the rest of the week if we do close above 452.05. And I would have to say that there would be more favorable Russian-Ukrainian news. We're still getting inflationary data that's suggesting inflation is still a threat on the near to midterm horizon. And, but if we get more favorable Russian events, in other words, continued pulling away from the borders, or an indication that they're disinclined to invade, and I don't think that that's going to happen at all. But if so, we could close above 452.05, in which case we should then, within 2 to 3 days, reach that 460.02 formation, which we tested clearly about 2 weeks ago, and then came very close to retesting about a week later, as you can see. And that really is our ceiling through March. We can still fail there. We can fall short of that. We can rally short of that and fail. We can test it outright again and fail through March and fall off. But if we close above 460.02, I think that is about it for this move. A good Q1 low, probably a good low through Q2, which would put us into mid-year. I would then expect a 479 and change move high from December within probably 2 to 3 weeks, and the low 500 area over the following 5 to 8 weeks or so. We could double top in the 479 area, FYI, for more than a week perhaps. But I think closing above 460.02, the move low is in, and we probably won't revisit these areas until later in the year, if we do at all. So let's take a look at the support and resistance again for the day, and I'll cover the downside, that if we break or open below 443.45, that 435.03 level is in reach today. We missed that by a hair on Monday. It is really nothing more than the downside 5/8 Fibonacci retracement from the late January low against the high in early February, about a week and a half, 2 weeks later. And so it can contain daily selling pressures. And once again, if we break, especially if we open today below 443.45, that would probably not only close that gap from Monday to Tuesday, but in the process, I think as the day wears on, we could quite easily fall all the way back to 435.03, where we can place a daily low. And closing below 435.03, we're probably 3 to 5 days away from testing the January low at 420.76, where we could double bottom on a weekly basis. I'm just going to remind you of this picture. This is the one I have in my mind, holding below 460.02. We'll keep the low 400 area in reach, quite possibly by the end of March. And not until we close above 460.02 am I completely off that as a possibility. And inside of all that are just sort of a short-term opportunities right now, great for swing traders. Selling 452.05 above the market. It actually could play out into later week. Buying 435.03 below the market certainly could play out into later week. Those are both session containment levels. Either one of those are in reach today. If we push, as I say, above 447.03, we should reach 452.05. If we break 443.45, we can test 435.03. And then closing above 452.05, we've got a 3 to 5 day target at 460.02, which is our meaningful long-term resistance that can contain buying. I need to amend that text through March, not only through February anymore. And below which the 402 handle in reach by the end of March, perhaps. If we close above 460.02, I think we've got a good low through the second quarter, which would put us into mid-year. And downside, if we close below 435.03, then the 420.76 low from late January expected within 3 to 5 days, where we could double bottom at least on a weekly basis. I say at least because I think that 420.76 is going to line up roughly with the SPY support presently in the 329 handle and climbing that long-term channel bottom that we've yet to test. Did I say SPY? I meant to say triple Q. So I think 420.76 and the SPY should line up, at least for right now, with the triple Q in the 329 handle long-term support, which remains in reach over the coming weeks. And so I'm just I'll just leave it at that. And then, of course, closing below 420.76, that 402.12 long-term channel bottom is likely within as little as 2 to 3 weeks. I've thrown a lot at you there. Please click like and stick around for another 45 seconds. I remind you that the SPY is going into a paid format here in just a couple of weeks. And I appreciate you watching. I appreciate your support. Please click like, and I will be back tomorrow for Thursday's Daily SPY Report. You have a great day. The daily video you just watched will require a paid subscription to WickedStocks.com beginning Tuesday, March 1st. Become a WickedStocks.com premium member to continue receiving our daily SPY report, our daily Triple Q report, our weekly DIA, IWM, and Bitcoin reports. Monthly subscriptions start at $25 a month. If you're not ready to become a premium member, I encourage you to become a basic member for free, which will alert you once these analysis videos become part of our paid subscription plan on March 1st. We will continue to offer free and valuable content on YouTube, though it will not include the series of videos mentioned earlier. We hope you become a wickedstocks.com premium member. We offer a 7-day free trial, and cancellation is allowed at any time.